What's up guys, Kevin Cage here with another crypto update. Hope everyone's doing well. We're gonna rant about crypto in this market cycle. Over the past few hours, I had my buddy Miguel come over and help clean some AC units. I was supposed to have him maintained a lot more often, and I lost his number because he got robbed. And long story short, we had a bunch of black mold on one of our bigger AC units, and over the past few days, we were having dizzy spells to the point where we almost thought we were gonna pass out, kind of getting a little loopy. And I thought it was 75 hard, so I'm actually pretty thankful to find out that we got rid of the black mold. So all good, and huge thank you to Miguel. We ended up talking about crypto the past few hours, cleaning the AC units, and I found out that he had some Doge on one of his wallets and he got locked out of with two-factor authentication. So we cleaned some AC units and got his access back to the wallet and just talked about the bull run. So I'm personally excited with where I think we're at in this cycle for a variety of assets where Bitcoin is wicked into an all-time price. During the last two cycles, whether it took 2 to 3 weeks or even a couple months, we break into much higher levels, and that's my personal opinion. So it's been great to see the performance of some assets already at an all-time price, like Fetch and Render. We're seeing others like Ocean, Track going to much higher levels, potentially Solana, AVAX, and others. And then we have DOT, HBAR, others officially breaking out of accumulation, and then we even have others at much lower levels. So we're seeing some get those waves up to even the March and April 2022 high. Sometimes it's just the 236 Fibonacci retracement from this high to the cycle low. But bottom line, we're seeing more and more alts wake up. We don't know what the wave structures are going to be like perfectly. We don't know when we're going to be stuck in consolidation just like Ocean was here before finally getting this pop. But really just looking at the 21-week EMA for a variety of assets, and I'm very bullish. And it doesn't mean that there's not going to be pullbacks for Bitcoin coming back to the 21-week EMA like previous cycles, but overall, I believe that Bitcoin goes significantly higher. I believe this is the next cycle per recent videos where we broke it down and showed all the similarities that we had during the last two cycles. And friendly reminder for anybody new to the channel, if we do talk about low caps or micro caps on occasion, it doesn't mean I'm saying it's a good entry now, but I will be covering some developments and looking at some price charts in the future. You can find a great asset, but it might not be ideal for a good entry, or you could find even a bad asset with bad fundamentals, but from a charting perspective, it's a good entry. So it's important to always do your own research. You can watch a YouTube video and get some helpful information, but you have to do your own due diligence beyond that because it's your money. Crypto is super volatile. There's cases where people take positions in an asset, it crashes 50%, they sell, and then later it does a 10x. Or vice versa, they're buying the top and it does a 90% crash. So there's huge opportunity in the volatility, but just remember, for anybody brand new, the risk is always there. And just looking at the Bitcoin weekly price chart, bear markets, multi-year bear markets are incredibly difficult to navigate. Sometimes they're at lows, just in a tight range in accumulations. Sometimes we get more of a retracement, and sometimes it's more of a V-shaped recovery. But alts get typically smashed a lot more than Bitcoin. Some of us might have really nice entries from this past bear market, or even just a recent entry in an alt that is yet to pop. So if Bitcoin rhymes with the previous cycles where it breaks into an all-time high price going significantly higher, drawing major candles above the previous all-time high, we're likely going to see a rhyme with the alt market. And just thinking about our own emotions during bear markets, during bull runs, during trendless markets, just trapped in a range. When an asset starts going up in price, we're a lot more confident. A lot of new retail investors will see an asset go up 2, 3, 5x, and they'll want to keep buying on the way up, but you're ruining your DCA. We've already seen some assets go into all-time highs. We've seen others actually retrace to higher retracement levels. The higher the prices go, the higher the price predictions get, and the more excited we get. Bull runs historically, when we get significant price action for a lot of alts, whether they're just very strong retracements or some go to all-time highs, the emotions are only going to get stronger. So it's an insane balancing act, and some people might have really high price targets for their take profit. If they hit them, they can make insane wealth. If you set them too high though, you risk none of them or only some of them being hit. And the same thing for people that have more conservative targets. They might all get hit, but you could have made more if you had higher take profit levels. So some of us might sell way too early in some holdings and be kicking ourselves, but some people might not even sell at all. But bottom line, if you're profitable, huge props. And the good thing is, if we are in fact following the previous cycles where we wicked into an all-time high price, came back down, and then later drew that first major move to the upside in 2020, just like in 2017, breaking the highs, coming back down, and then impulsing later. If we did follow, this historically would be a great time to be in the crypto asset class. Because last cycle we exploded, but you realize that a lot of the new retail investors came in the market in March, April, maybe even later around October of 2021. During this phase, this was the top, and new retail investors that entered the market absolutely got wrecked. But the investors that were in the 2017 bull run or beforehand, or even just accumulating during this bear market, during this major move when Bitcoin blasted, were in a great position. So we're at this point now, for everybody that's been in this market, has experienced one bull run, or have just been accumulating throughout this bear market, are in a great position. If and only if Bitcoin does go significantly higher, which is what I believe. That is not financial advice. And market sentiment is a hell of a thing. The economy, I don't care what anybody says, the economy sucks. And I'm just speaking for the average American, considering inflation. What the Fed reports is not even accurate. Home prices, monetary printing, it's ridiculous. I know there's some degree of excitement and greed in the market, but this is nothing like when Bitcoin blasts into much higher prices. Looking at the euphoria in the altcoin market when the altcoin market takes off in 2017, even early 2021, during those alt seasons when Bitcoin dominance dropped. Yes, we wicked into an all-time high price for Bitcoin. Some assets are at all-time highs, some are retracing, and some are at their lows. We are nowhere near market euphoria. And like we all know, we see Bitcoin go to 80K or 100K plus, and then alts later follow and potentially a major alt season. That's when a lot of the retail or the majority of new retail investors are going to enter. And one last point is I see a lot of comments asking about different alts or microcaps when they're up 50x or when they just do a quick 3x and saying, why did they do this? Well, frankly, we can think it's because of the fundamentals. Sometimes it is. Maybe there's some new development. But typically, it's just when there are more buyers than sellers and the buy pressure is greater than the sell pressure. So a lot of assets are just randomly popping like we historically see. It may be two fundamentals, it may be a combination of factors, but personally I believe it is just a combination of the algorithms that run in the crypto asset class. There are patterns and fractals that repeat in the stock market, and the crypto asset class has their own. And don't get me wrong, I'm excited to see any asset perform really well doing a multi-100% or multi-1000% return. And sometimes there is a piece of fundamental news timed with that, but sometimes there isn't. This is just volume rotating between different assets, reaching different levels of support and resistance, and following similar patterns that we see each cycle. There are high-frequency algorithms by institutions or just large whales with a lot of holdings, an XRP, and a variety of digital assets. There are people that program arbitrage bots on DEXs, connecting, using flash loans, all of these factors. So I'm speculating just like everybody, and that's my personal opinion. So we've gone over a bunch of charts in previous videos explaining Bitcoin dominance, looking at different assets and patterns on the Fibonacci retracement following fractals, following similar patterns and accumulation going into markup. We've talked about different considerations when going to moving averages, some assets really respecting them and wicking to them for levels of support and resistance. So we see these patterns everywhere for any asset on a variety of time frames. So one fractal on the daily could exist on the weekly. It could also exist on the 30-minute. So when I'm analyzing, and to be clear, I've made dozens of mistakes this past bear market alone. I'm looking at those similarities because there are times when different assets are on a similar type of pattern. And it's still guessing. That's why it's important to look for levels and levels of confluence to have that higher probability. For my personal portfolio, it's best to hold multiple holdings. If some go up really high, you can sell those winners to the losers. This is just a super common rotation practice in the crypto asset class, specifically during bull runs. We're idiots during bear markets and multi-year bear markets, black swans, hacks, oh, crypto's a scam. Then the bull run comes every few years and then boom, people are asking you for advice. It's just market emotions with price action and fundamental news. And here's a quick example of different assets we've seen thus far. So fetch and we have render. This is the monthly time frame, the big picture view. Every single candle takes about 30 days to draw. Their monthly RSI pure 70 into overbought, where RSI or the momentum is at a high. We have an all-time high price for fetch and an all-time high for render. We have other assets not yet at all-time high prices like Solana and Ocean. They've gotten up to some different Fibonacci retracements, but their monthly RSI is also at a high. So if it were to follow, we could assume these also reach an all-time high price. We have others that are even lower like AVAX and Chainlink at lower Fibonacci retracement levels, monthly RSI yet to even pure 70 and overbought. We have other assets even below those levels on the monthly time frame like DOT and HBAR, so both of them have broken out of accumulation, taking out their previous highs, RSIs even lower than the previous ones. And then we have other assets at their lows like Energy Web, even Kava. So whether you use the fib on the candle bodies for Energy Web or the crazy liquidity wicks, we are still at our lows. So this is just a basic example of showing assets that are at all-time highs at higher retracements are a little lower, and then those that are at their lows. We can look at assets at their lows and go, wow, the ROI to even some of these retracements or an all-time high is a lot better than something like Solana. But the question is, we don't know which ones move first. If Solana's trend is already stronger, alts like Solana, where their monthly RSI is already an overbought up here, have higher momentum and they can actually keep moving higher before anything else even moves at their lows. So we don't know, and it's a guessing game of which order they're going to move in. So we can try to do a top-down analysis looking at support and resistance levels, Fibonacci levels, the RSI from the monthly, where we can see here going to the 3-week, down to the weekly, where we can see the weekly curling up a bit, go down to the 5-day, 3-day, daily, go to the 23-hour, Go all the way down to the 4-hour and look at RSI and try to gauge, but then also consider divergence. There's so many things to do, but big picture, just looking at previous cycles and looking at the movement of Bitcoin, I'm basically trying to accumulate alts at lower levels. I'm open to buying some that are already up, especially if it looks like a similar structure to be following behind Ocean, Track, and other potential leaders. But that is the game we're playing, and some people just want simplicity. They just want to accumulate an asset as low as possible or have a decent entry price and set a few staggered profits or take profit levels and get the heck out. And some investors may just want to accumulate a certain set amount and set and forget it, so to each their own. Everybody has their own investment strategy, time horizon, risk appetite, and goals. And the best investment strategy is the one that happens to work in the current market trend. So when we're looking at assets at an all-time price, it doesn't mean it's at a market top, but we're in price discovery, which is super exciting. And even just looking at low caps or micro caps, Velo got absolutely smashed last cycle, but the structure down here looks really good when you're considering the March-April 2022 high, or even some Fibonacci retracement levels compared to what other assets have already done. I have positions in high caps, mid caps, even micro caps like Velo, Wi-Fi, Checked, Kilt, a variety. And we're seeing a variety of assets. This consolidation reminds me of Ocean. It's just on a different type of retracement level, but we can see Demetra right here holding the 21 week and then popping. We have VThor right here in tight accumulation, breaking out, kind of back testing this range and then going higher. So we're just seeing a bunch starting to retrace, and that's my personal opinion. I'm just comparing assets that we have today. We've got a bunch of news to go over in future videos, but we'll finish up with this. So iTrustCapital explaining the Bitcoin halving for anybody curious, a great 2-minute video right on their website. Right now we have the halving set to take place in April, whether it's April 18th or April 25th, it's coming quick. In previous videos, we've gone through a bunch showing the comparisons of the monthly RSI, the 618 Fibonacci retracement, breaking into all-time highs. The count after the weekly close over the 50% Fibonacci retracement, discussing elections, the halving date, and the debt refi cycle that Raoul Pal talks about. But all in all, it looks like all of these cycles and all of this analysis I'm looking at just aligns with global liquidity. When global liquidity increases, stocks, technology stocks, and crypto perform well. So there are a bunch of narratives. I have my own opinions based off of things I see, and they're all subjective, but all in all, the markets move in cycles. And last but not least, we have iTrustCapital linked in the top of this YouTube video description, in my link tree, and in the pinned comment. If you use that link to create a free account and fund it, you get a $100 funding reward. So these are crypto, Roth IRAs, traditional IRAs, 401ks, all types of different accounts. It's not for everybody, but it was for me because I had a Roth IRA in the S&P 500 that I rolled into the crypto asset class years ago. So feel free to check them out, guys, if you're curious, and I hope you enjoyed today's video, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.